Hey everyone, Nick Sforza here, local real estate broker covering all of Long Island and New York City. Thank you for joining my latest podcast about today's real estate market. I'm really excited about today's guest. Today I have Jeff LAFAZAN. He is from Prudential Borrowing Mortgage. He is a mortgage broker. He's been a mortgage broker and loan officer for a total of 30 years. And I'm very, very happy and privileged to have him here today. So Jeff, first I just want to say thank you so much for taking the time to meet with me, to talk just a few minutes so you could educate my clients or my buyers, hopefully your future buyers, about today's market. I think a lot of people are extremely concerned as to where the rates are going, what the future of the market is. And I think it's definitely great that you're on here and giving us your time. So thank you so much. I want to make sure I start by saying that.
My pleasure.
And Jeff, why don't you take a few seconds just to introduce yourself to my audience, talk about your experience, who you've worked for, and so forth.
Sure. So welcome, folks. Jeff LAFAZAN here, loan officer. I've been doing this for a little more than 30 years. I worked at 3 different places for about 9 years each. And then between switching from 18 till now, there was a few missteps along the way to find the right home for me. I thought I'd found it. It was actually the gal who was the daughter of the person I first went to work for in the industry. But she closed her doors. So I found a new place. But I'm really self-contained. As a broker, it's my solution, my thinking. The banks are the same. Wherever I work, it's like an insurance company. I have access to all the different products, and that's better than just working for one shop that only has one product.
Absolutely. Absolutely. Yeah, good to know. So let's start with the first question about, I'm sure what everybody always asks me. What is going on with the rates right now? I know they've been going up. People are concerned. What are the rates right now? Where are they headed? What are your thoughts on that?
Yeah, so right now, if you're a Fannie Mae borrower and you're not in a lower income bracket, which is actually a little cheaper, they help those people a little more, you're going to pay right now 7 to 7.5% based on your down payment, based on your credit scores and all those issues, and based on the bank. Some credit unions and as a broker, really good banks, wholesale, they have good pricing, but there are some places that do private banking. So there's many different choices. If people have lesser credit today, or they're buying an investment property, they're already up to 8%. So that sounds pretty crazy, right? But historically, it's not so crazy if you look at the whole history of the market and leave out these last bunch of years. I personally think that there's a lot of pressure and the rates are going to stay high for a very long time. I don't think we'll see the Fed lower their Fed funds rate, which dictates adjustable mortgages. I don't think we'll see that before 2026 at the earliest. There's too many pressures on creating inflation, job wage increases. There is more efficiency in the economy, gig economy. Everybody's got a second job. So there's lots of spending. Or the bottom income earners, we've given them huge raises, going up from sometimes $7.50 to $15 an hour. Collectively, over a lot of people, it all adds inflation. And the biggest thing that I believe continues to add inflation is the war in Ukraine. So we keep spending money, fortunes. And when we keep spending money in a war, what do? You borrow money. So there's too many bonds out there, and the rates are going to stay high for a while. So I think buyers, buy now. If you're waiting for lower rates, it's not coming, not for quite a while. And if it does, housing prices will be so much higher, your payment won't be any better. So time to buy is now.
Yeah, great point. I mean, some people would think that after the election, they may come down. I know I've read some areas like at the end of 2024, they may see them dropping, but I agree with you. I think the way the economy is now, the way inflation is, I just can't see the rates dropping so quickly in the next 12 months. And I do feel like this is where we're at right now. The economy is obviously important. Inflation is obviously important. But you think in 2026. So yeah, it would make sense for people to purchase now. I mean, obviously and I agree with what you said before. 8%, although sounds really high. I remember when I got into the real estate market 25, 30 years ago as a buyer, 8%, 7.5% was a great rate. We were excited to get that. And then when it went down to 6, we were just ecstatic. But people got spoiled at 3%. And they think 6, 7%, the world's collapsing, and it's really not. It's actually, a good time to buy still. I do think the future is a little scary in the sense of the rates. They could go higher. So you're right. It's definitely good to start looking. So 2026.
At the earliest, you see, if
Yeah.
you listen to the Fed and Powell, what they're saying is they will not make a mistake that we made in the 70s as a country. We are letting you know, and they want to be transparent. They don't want to surprise the markets. So they're being transparent. They're saying we're staying this course. Anybody who's thinking that's lower, they think that we're going to have a dramatic depression and a real loss in jobs and a real loss in income, and that will force them to lower the rate. But I don't think we have that. I think the American people have proven that we're more resourceful and more responsive to change than the rest of the world has been due to COVID. And I think it's given us a new leg up. And I think our economy is good and is going to stay good.
Yeah, that's a great point. Very well said. I agree with you on that 100%. I don't think it's going to be what people think. It is everybody's. Some people are panicking, thinking the world's going to collapse or the economy here is going to collapse. Obviously, we may be a little bit of a hit, but I agree with you. I think people are resilient. They figured out a way to get through this. Everybody was saying 2023 was going to be an utter nightmare, and it's been a great market for sellers. It's been a great market for brokers, for myself. So, yeah, I think that was very well said. So what are your thoughts now? So we're telling people right now they should look to buy. If they want to buy a house, waiting, I think, is not a great idea.
Correct.
So what are your suggestions? Let's start with first-time home buyers. What do you suggest they start doing as they start get preparing to purchase something in terms of mortgages? Like if they met with you today, what would your advice be to them?
I want to back up one step before that and say, who are the people that should buy? And what I think is that regardless of the market, nobody should be timing the marketplace. When you are emotionally and financially that you think you're ready to buy, then it's time to buy, and regardless of the finances. And how we begin is looking at your budget, seeing what you're going to pay for a mortgage payment a month, what you pay for rent now, and how you're going to close that gap. Are you saving it? Are you getting an increase in a job? So basically we look at your annual income today and going forward. We look at the money you have in the bank or in stocks or investments for today and to spend for the transaction. We look at your credit, and then we look at the property. And those four pieces of the puzzle are really like four legs of a chair. If three are really strong and one is a little wobbly, the chair holds and the loan closes. Mm-hmm. If a number of them are wobbly, that's the chair that collapses, and that's that loan that doesn't close. So what I say to people, let's get information out there. Don't be a wobbly chair. Get your answers up front. Look at your income, look at your assets, fix your credit if we need to. Get yourself reasonable in what you're going to buy, something that you can afford, or get some larger gift from family, whatever. And then go look for a mortgage for a house that you can afford. So you can buy it, afford it, come home every day and enjoy coming home to the house. Because that bill shows up at the first of every month and it doesn't stop coming.
Absolutely. I remember when I first started, I was house poor. I had the house, I was proud of the house, but I definitely stretched myself a bit. It was, it took away a little bit of the enjoyment of the house for sure. You want to make sure you're financially secure. So great point.
So my best practice for them, I'm going to stick in one more thing. My best practice, if your rent is $1,000 and we see that your mortgage payment is going to be $3,000, pay your rent on time every month and put $2,000 in the bank. If you do that for 6 months in a row, you're going to know exactly what it feels like to make that mortgage payment. Yeah,
great point. Okay. Great advice. What about investors? People out there looking to buy a second home. They think it might be a good opportunity to buy based on where the market's at. What are your suggestions, whether they're a first-time investor or someone looking to flip or long-term? Any thoughts on that? Any good programs out there?
There are a tremendous amount of programs for construction loans. If people want to buy something, like you mentioned, fix and flip. So something that if you need a little cash to buy it, fix it up and then put it back on the market and sell it. If you have that vision, those loan programs are out there for pretty much everybody, even if you're not so experienced. If you want to be a newer investor, I say maybe buy in an area that's not yet so in demand, like in Florida. Maybe somewhere, look where the people are now looking, maybe in a place in other parts of South Carolina, not Charleston, and parts of Georgia, maybe Savannah, or whatever you're doing, you can look for a piece of land there or a house, you can rent it, And then 15 years from now, when you're retiring, maybe you move down there yourself and sell your house up here. So that's kind of a nice step if you're thinking about down the road as an investment. And that's a small investment, but really the best investment is right here in New York. You're going to find better properties, and you're going to find, it's hard to find value, but you're going to find better properties where you can make money on them. Not always in, Florida is a long-term thing. That's like a 15-year investment thing.
Yeah, exactly. That's my future plan. But definitely New York has got great growth. That's the beauty of New York. I know it's expensive, but the growth is tremendous. Even if you're not making anything monthly, over the course of 5 years, 10 years, you could definitely see a lot of equity build up in that house. So I completely agree. But I definitely have my eye out there, out of state. Do you do mortgages all over the country? Are you mainly New York? What's your territory?
I work with my team in Prudential, and I do the New York loans, and I work with other loan offices for other states like Georgia, Florida, Pennsylvania. But I'm involved in a loan. I just have a second set of eyes on it that they know specifically for their state, some extra guides and regulations, and they make me aware of. So we work like a team together. So it's New York, New Jersey, Pennsylvania, Connecticut, Georgia, Florida, soon to be North and South Carolina, and we hope to close the seaboard soon enough.
No, good to know. Good to know. So who's your ideal client, Jeff, when you are looking for somebody, you're looking for a referral, like who do you like working with? Who do you normally work with? What's your situation there?
I get most of my referrals from other professionals. So from realtors, from financial planners, from accountants. And I like working with first-time home buyers, although I'm happy to help anybody buy a second home, a third home. I'm happy to just do a mortgage for everybody. But I do love working with first-time home buyers, because if they listen, they can really get a lot of house for their money, and they can really also be happy with that transaction. And that means, reaching a little bit, because I think the people that don't reach for a house, I think it's human nature. You want a little more house than maybe you can afford, but as much as you can. And getting that extra house means a difference. People are happy. In my experience over the years, people that play it safe and buy a lesser house because it's much more financially safer, they're calling me back 6 months later, they're ready to move. So they want the bigger house. So it's a challenge, but I like working with first-time home buyers very much.
Yeah, I definitely, and that's why I like working with you. You said you're very knowledgeable, not just about what's going on in the market, not only what's going on with the mortgages, but you're really good at talking to the first-time homebuyer clients, getting to know them, getting to know their financial situation, and you provide really sound advice. And I think that is probably the most important thing in the transaction, is the mortgage broker making sure that they're truly looking out for them and their finances and building their future. Because as your primary residence grows, there's good things out there like lines of credit, ELOCs, where they can borrow and buy a second home and investment property. So it's really important that they don't overextend themselves in that first purchase, and they have someone like you guiding them and telling them what they could do next. It's really important. So there's a big reason why, guys, I have Jeff on here. I know he really cares about his clients. It's not just about making a deal or making a mortgage, but he really is looking out for you financially as well. I actually like picking his brain and talking to him about mortgages myself, and I've been doing it for quite some time. Jeff, we're just about done, but I want you to plug your Common Sense blog, if you don't mind.
Sure.
And I'm
Sure,
going to put
thanks
it
so much.
on the link. I'm going to put the link on my YouTube description area. So, but Jeff, tell us about Common Sense. I've read it quite a few times. I find it extremely informative.
Thanks. So actually, it's my sons. I have 3 sons in their 20s, and they're the ones who convinced me to start writing it. And I just write things about real estate and about some common sense tips for life that just come to me. And, people do appreciate them. And now I'm getting a little following. People do like to read it because there's some new ideas. And, there's a tip of the week and now a quote of the week as well. So it's really a fast read, once a week, pretty easy. I'd love for you to subscribe. And then this way it'll come to you automatically every single week. And just a vision of a street vision from an old-time loan officer. Thanks so much, Nick. And it's a pleasure working with you as well. You're a gentleman, and you treat everybody like gentlemen and women, kind ladies. You're always just very, very kind to everybody. And just want to say, appreciate that.
Thank you. Thank you so much. So how does anybody get in touch with you? I mean, obviously I'll put your contact info in the description, but if you just want to say what's the best way to get in touch with you, feel free to do it now.
Sure, send me an email, call my cell. That's it.
Sure. And that'll be in the description, guys. You'll see it in the comments. I just want to thank my viewers for tuning in. Please like this video, subscribe to my YouTube channel. And if you're in need of purchasing a home anywhere in Long Island, New York City, please reach out to me. I'd be happy to help you, particularly listing. I love listing all types of homes, single family, luxury, investment, and so forth. And as you know, I have a great team with me. Jeff right here is included. He'll be there side by side with you with the mortgage process. So reach out. Thanks for joining. Have a great day, everyone.